You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back. It is time to kick off a new vol trading year. Yes, wild, hard to believe. It is the first Volatility Views of the new year. Hope your New Year's was fun. Hope your end of your holiday season all went out with a bang. You had a good time with friends and family and all sorts of other fun. Of course, my name, Mark Longo from theoptionsinsider.com, as well as from the network that so many of you binged in 2025. It was a wild year. Added a couple of new shows to the network because why not? In year 19, why not keep adding shows? All sorts of fun. Make sure wherever you get involved views, you subscribe to the full network. And for those of you somehow, if you're just discovering us right now, we love it. New people listening all the time. Hey, welcome. B, you missed out on a wild year. Make sure you go check out some of the highlights last year. It was a fun one on the old show. Joining me to kick off this new year here, a bit of an interesting show to kick off the new year because it is an important one after all. This is where we kind of set the tone for the year. When we go back at the end of the year and we look back at how things perform, we will benchmark them against today. But unfortunately, real estate emergencies beckoned away our good buddy Dr. Vix, just as we were going to go deep into all things 2025. So I know he'll be joining us with all sorts of data points on next week's show. So if you're looking forward to even more 2025 analysis and fun, don't worry. I'm sure he'll have some in store for you on the show next week. But joining me, we have the perfect guest to kick off the new year here because he usually kicks off his vol year by looking back on all things 2025. He does his now famous / infamous analysis of the year that was in vol. And because we're jerks here on the show, we made him do it a lot earlier this year. We said, hey, don't wait until end of January, maybe February when you get around to, nope, we're going to do it right to kick off the year. And you know what? He was kind enough to accommodate, not us at the end of the day, listeners. He did it to accommodate you because he loves you, the Vol Views audience. None other than our good pal, Mr. Jim Carroll, a.k.a. the Vixologist, who when he's not Vixologying, to coin a phrase, he's hanging out over there at Ballast Rock. Mr. Jim, Happy New Year to you and welcome to Volatility Views, sir. It's been a while.
And Happy New Year to you, Mark, and to all your faithful listeners, all the vol maniacs out there in the land. It's it's a brand new year.
I like that. Vol Maniacs. I might have to christen our audience the Vol Maniacs out there. Well, I'm sure you were kind of regretting when we tapped you to come on because it's so early. You're like, wait a minute, I don't have any of this done. But you know what? That never stopped us before, Jim. It is time for the first volatility review of 2025, of 2026. Here we go.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the first volatility review of 2025. I did it again, 2025. That is actually, ironically, the subject of our flash poll right now. We asked you quite simply, how long does it typically take you to stop saying 2025 and writing 2025 on everything? About a week, 2 to 3 weeks, about 1 month, or never. You never get a hang of it until the next year rolls around than you do in the previous year all the time. And right now, 100% of you in the early voting are saying about 1 week. So hopefully 1 week from now, I'll have it all down. Here, listeners, I'll be saying 2026 like the rest of you out here. But as we're kicking off this new year with our first session of the new year, we're seeing things mostly mixed. Seems like we're tilting towards the red, though. S&P off about 0.15%. NASDAQ off about 1/3%. A Dow up slightly, up about 0.15%. VIX cash was hanging out at pretty close to a 15 when we kicked off the show. That puts it up a little over one, about 1.15 points from last week. As the show has commenced, it's dropped about a 14.85. So that puts it up about exactly a point from where it was this time last week. Volley at about a 12.5, up about 1.5 points. And everybody's favorite VVIX, the vol of vol itself, at a 93, up about 8 points from where it was this time last week. But you know what, Jim? It's our first show of the new year. So nobody cares about that. We're not going to look at what's going on in the vol market right now. We're instead going to look back at the mad year that was 2025. And you know what? Even before we do that, I have an extra added bonus for you, Mr. Jim. Something we've never done on Vol Views before. You've never had a chance to do it. We usually do it on Options Bootcamp, some of our other shows. But it's our first show of the new year, so we're going to do it in style, Jim, with a giveaway. We're going to give away our Pro Trading Crate for the month of December, and you are going to help us do it, sir. Are you ready?
I'm ready, Mark.
All right.
I have no idea what I'm ready for, but let's go.
You don't know what you're volunteering for, sir. But actually, it's pretty easy. So I have my random number generator flashing on my screen as we speak. That corresponds to all the numbers of our members in our pro. And when you tell me to stop, whenever that is, then I will stop the random number generator. And you, sir, you will choose the winner of the big December pro trip. Can you handle that responsibility, sir?
I believe I can handle that responsibility.
All right, so you tell me. You can do it now if you want to wait the whole show. That'd be rough for the people. They'll be waiting all show, but it's up to you, sir. You are the arbiter.
Well, I think actually the time is now.
Oh, there we go. See, I knew you were going to get to it. My co-host on Options Bootcamp, Dan Passarelli, he likes to try to throw me curveballs, but I'm quick on the trigger finger for the folks out there, Mr. Jim. So let's see, who did you pick? Mr. Jim, who is that now? Eric Sanders. So there you go, Eric. Congrats on winning the December Pro Trading Crate. Thank you for being part of the ongoing fun that is Options Insider Pro. If you're not part of the Pro and you want to get your name in the hat, maybe Jim will pick you next time. If you didn't win, by the way, send all your hate mail to Jim, not to me. But Eric, congrats. Our producers will be in touch out there. Should be a fun one. December, always a fun. They're all fun, but December, always fun as well with that holiday season. But Jim, it is that time, sir. It is the first trading day of the new year. That means it's time to look back. We finally have closed the books on 2025. I know there's a lot. You put together a whole presentation. So we'll get to all of that. I have my own thoughts I want to share as well. But if I ask you right now, top of the show, 10,000 foot, as you look back at the mad vol year that was 2025, is there one particular trend or development that really leaps off the page and stands out to you that says, you know, this is what I think of when I think of vol in 2025?
Well, I think there's no question that, with the benefit of some perspective looking back and even, if we look back at the end of 2026 or 2027, we're going to look at 2025 as the year of the tariff tantrum, because that is really what defined the volatility landscape for the year. We entered the year, Trump 2.0. We had a little vol spike right at the end of December 2024 around the Fed meeting, just to get us a little juiced up. Things then calmed down. We got through the inauguration without any particular tumult, but come April Fool's Day, close enough, we got the tariff news, and the market apparently was just not quite ready for the I can't get out of my mind the picture of Trump with his little tally board and all the percentages that were going to be applied to different countries, and people looking at that saying, what what? And off we went. Boom.
Off we went indeed. I'm glad you started with the evolution on the VIX cash front, because that's where I was thinking as well. That's the lens through which a lot of our listeners tend to engage with vol first before they start looking at other products and other things in the vol landscape. And as you mentioned, we kicked off the year. Obviously, we're heading into inauguration. We knew in previous years, January had been kind of a wild start to the year. We kicked off the year, the VIX cash close to an 18, listeners. We closed right around 1793, exactly a year ago on January 2nd. So maybe a little bit frothier than you might have expected for that time of year. And then we'll get to where we closed at the end of the year a little bit later in the show, because it's a bit of a moving target, and it's a very contentious one as well. And it's also a very important one because we have to pay off our big VIX poll from last year and kick off our new one for this year. So all sorts of fun will be had a little bit later in the show as well, listeners. But before we get there, as Jim alluded to, we kind of started to see a little bit of dust up with vol heading into Inauguration Day, but nothing crazy. We didn't even really get past the 20 handle. It wasn't until Valentine's Day and starting to creep into late into February where we started to see the first inklings of vol. We didn't quite get to a 30 handle, but we got close. That was on March 10th. We got an intraday high of about 29 in the VIX cash. So that was a decent trajectory starting the year around a 17, 18, getting all the way up to nearly a 30 by March 10th. And then, of course, that all pretty much went away. Not that long before, as Jim mentioned, the whiteboard came out with all the tariffs on it. Vol had settled back down. The VIX cash got back down to pretty much where it started the year. We were about a 17 handle again, even by late March, by about March 25th. So it seems like most of that early dust up we had in vol was pretty much gone. And then, as Jim alluded to, the big vol story of the year, aka the tariff tantrum that really kicked off in April, just came in with a bang. We saw VIX cash getting as high as about a 60 handle intraday. And again, I know this is another contentious thing. In fact, I think this was a big talking point on our vol deathmatch 1.0 between you and our good buddy Dr. Vix over how reliable some of these numbers are with VIX. They started incorporating after hours numbers into this, and things aren't really trading. So there is still a lot of debate about VIX cash levels during the day. But that said, we see an intraday high of right around the 60 handle, listeners, closing a little bit north of 52 on April 8th. That does mark the apex for the year. We never really sniffed that level again. In fact, on tax day, so about exactly a week later, April 15th, we saw that vol pretty much get cut in half. We were back to about a 30 handle by tax day. So Jim, before I keep going, walk us through your thoughts on that time period. Obviously, it was the apex for vol for the year. What were your thoughts on the tariff tantrum period, sir?
Well, I think what was most interesting, and you might need to be a vol nerd to appreciate this.
Or what'd you call them, vol maniacs? The vol maniacs might like it, sir.
And vol nerds are a subset of the vol maniacs.
Yes, the Venn diagram, a lot of overlap.
But, one of the things that you could see in advance of that April tantrum set off was that whether you were looking at the futures term structure or the SIBO term structure, and I use VIX 9 days, VIX 3M, and VIX 6M really as the core components there. There were people definitely taking steps in advance of any tariff announcements. You saw VIX 9-day get ahead of VIX in late March. So, again, if you were looking at what I referred to as the SIBO volatility term structure, you saw some backwardation in advance of the explosion that happened in April. So, if you were paying attention, there were reasons to sort of sit up and consider taking some action before the what hit the fan.
Yes, we definitely were commenting on that on Vol Views back in the day as well. Folks knew something was in the offing. We didn't know exactly what or to what extent, obviously, but it didn't hang around that long. I mean, maybe, I guess that is subjective if you think a month is long, because by April 15th, it had already been cut in half. That apex we saw, that mad apex in VIX cash, was back to about a 30. By early May 2nd, we were back to about a 20 to 22 range in VIX cash. And pretty much by mid-May, May 16th, we were back to where we started the year, a 17 handle in VIX cash. So for all the Sturm und Drang surrounding the April meltdown and the tariff tantrum, maybe it didn't last as long as you expected. Of course, that's been a theme, and I don't want to bury the lead for later. I'll come back to this on the show, but that was definitely a theme we had for this year in terms of vol, is that the spikes we got maybe didn't hang around as long as some people might have hoped in the vol landscape. A couple other things that caught my eye: VIX cash land this year. Again, after April, Jim, we really didn't see a lot of juice on the vol front for most of the rest of the year, with a couple of notable exceptions. We kissed a 20 handle very briefly, with a 20 handle in June, a couple of sessions in June, and then one session in August. And that was really about it. August, a bit of an outlier this year, much more active than usual, hitting a 20 handle in vol, not usually the time when vol or the market as a whole were as active as they were this year. So August, a bit of an outlier this year. And then that was really it until October. We saw a little bit of a dust up in October. 16th, we hit about a little bit north of 25 in the VIX cash. And then that was it again, right back down again until about a month later in mid to late November, November 20th, we hit almost 26.5 in the VIX cash. So if you were hoping for a lot of spikes in vol land post tariff tantrum, they really didn't materialize this year, outside of a couple brief moments in June, August, and then a couple of nibbles north of the 20 handle in October and November. And that was pretty much it for the rest of the year. Jim, is that your takeaway as well from our buddy VIX cash for the year, sir? Any other thoughts in terms of all things ever evolving VIX cash, sir?
No, I that's exactly, my perspective as well, that post the April monster, where, clearly you had some people, even if they were putting on a few hedges in advance of expected tariff announcements, it would appear, based on the activity that ensued, that they were caught flat-footed relative to what they got concerned about when the announcements were made, because you don't see a spike like that without people being surprised. And I think, when we got to the later part of the year, October and November, there was no follow through. There were, as you said, two smaller spikes getting up into the 25, 26 neighborhood, but they reverted very quickly. And if anything, they were opportunities to fade the moves as opposed to chase the moves. Anybody who chased the moves wound up with a hole in their pocket, and the better opportunity was to fade those moves, but not everybody knows how to do that.
Yeah, we say it sometimes in the vol world, it's better to buy the vol when it's high and sell it when it's low, which is counterintuitive. This is, especially on the buying end, this was not the year for that trade. That was very challenging if you decided to chase the upside, as you put it out here. Well, Jim, we focus a lot on the vol term structure here on this show. I know that's something you spend all your days in when you're not talking to us out there. You pretty much live in the VIX term structure. I think your wife is jealous of the VIX term structure at this point, sir. You kind of touched on it earlier, but obviously last year was an interesting year on the vol surface with a few notable dust-ups, obviously April being the big one. But when you look back at the vol term structure for 2025, sir, what really stands out to you?
Well, what stands out to me is that, with the exception of the, as you refer to them, the dust-ups, the term structure has been reasonably well behaved, and particularly as we enter this new year, coming off of the December dust up, or I should say the November, we really have seen the term structure firmly in contango with, what relative to history is a very healthy spread between spot and the front month, between the front month and the second month. And, as a result, we've got, going into the new year, don't know how long it will last, but that volatility, that VIX futures term structure is a tailwind for, the risk on trade, however you want to frame that trade. Short volatility, long equities, it's a tailwind. It doesn't mean everything's going to remain calm for an extended period of time, but at least for the moment, it's a good time to be short volatility.
I'm looking at your charts here, Jim. And by the way, listeners, I'm not sure, Jim, we kind of forced him did a little early this year. So I'm not sure when you'll be able to get your hands on this, but I definitely encourage you, when it is available, we will certainly tweet it out. I'm sure Jim will as well. You got to take a look at Jim's charts. He really does a great breakdown for the year that was vol. And you have an interesting one you've included here for the first time, Jim, because we've done this a few times now on the show where we've looked back with you at your charts. I like this one, the VIX mix. You have a chart of the S&P with the VIX mix. What are we talking about here? Break it down for, what'd you call them, the vol maniacs?
For the vol maniacs. Everything's for the vol maniacs. So this was the first full year of live VIX mix. The VIX mix is something that I came up with after spending a whole bunch of time, many years, looking at different elements of what I refer to as the VIX complex, right? The VIX itself, the SIBO term structure, the VIX futures term structure, a constant maturity VIX futures measure. Right now, there are 17 different components to the VIX mix that I consolidate into a composite reading. And the chart that Mark's referring to shows where that composite was every trading day of 2025 relative to where the S&P was. And, some interesting statistics. It's on a range from 0 to 100%. And the average for 2025, 48%. right there at the halfway mark. And 27% of the trading days registered bullish. Interesting that most of those were in the back half of the year. And 28% of those trading days were bearish, leaving 45% in neutral territory. And what I find interesting is that there are times when the S&P 500 is going one direction and the VIX mix is going the other direction. And, they tend to offer up some opportunities to, take the other side of the divergence. We certainly saw that in the beginning of the year, where even as the S&P was making highs for that part of the year, the volatility complex was saying, meh, this is relatively uninteresting. We're not bullish. And that fed right into the tariff tantrum. In fact, there was a good trade to be had in late February, early March, the first down leg, and then the second. But, we're continuing to refine the components and our analysis of this composite. It's on my Substack at vixology.substack.com, and I tweet about it on a regular basis. But it's the first full year of live reporting for the VIX Mix in 2025.
Exciting stuff. I think we can make a tasty snack out of that VIX Mix. What do you think, Mr. Jim? What would go into a VIX Mix? Would you add sweet? Would it be a little spicy? Would you have something to spice it up? What would be in your VIX Mix? I guess it would depend on the year. If it was a spicy year, I think the VIX Mix, it tilts a little bit towards the spicier side. If it's kind of a quieter year, maybe you tilt a little sweeter, sir. What do you think?
That's I hadn't really thought about that as a product extension.
That's what you come to Vol Views for, the extensions into the Vol space. The Vol maniacs will literally eat up a VIX Mixer.
And I can put it out for holidays.
Yeah, there you go. Big bowl on the coffee table. Come sample my VIX Mix TM.
Yeah, you might want to take a look at at where the gauge sits before you grab a handful.
Yeah. Guests could play a game. They could come to your house. Maybe they don't follow the vol markets day to day like a lot of the vol maniacs. So they come in and they'll know what year it was just by taking a handful of your VIX Mix. They're like, oh my God, my mouth's on fire. It must be 2020 again. What is going on? So there we go. There's a lot we could do. We'll workshop it after the show, Jim. There's a lot we could do with tie-ins and branding out here. Now, I talked earlier about VIX Cash and what we saw out there and the highs and lows that we saw during the year, but you also track that. You're looking back and comparing it to recent years. Now, we beat 2024 in terms of we got higher total overall in VIX Cash and had a wider range. So for those of you looking for a little bit more juice out here, this year did deliver. But then again, if you look back historically, and that's what Jim likes to do in his presentations, he crunches the data. This chart goes all the way back to 2005. We've had a few other years that eclipsed this year. You could probably guess what they were if you've been around in the vol space for a little bit, listeners. We got 2008 and, of course, 2020. Surprisingly, 2018, we all think of Volmageddon, Jim, as being, the great destruction of vol that it was. And it certainly wiped out a lot of products we all know and love. But it doesn't even come close to 2025 on your chart, sir. What are your thoughts on your VIX range data for the year, sir?
Yeah, the 2018, for those of us who were in the trenches for Volmageddon, it looks kind of quaint in hindsight that it really never closed above 40. But that move in late January and the first week of February was rather precipitous and carried out a lot of vol tourists who have never returned.
Yes, that left the mark on the vol space for a while. We didn't see inverse vol return until a few years ago at post Volmageddon. So I still won't trade UVXY. I said that to Michael Listman on the show last week. I said, I'm still burned from 2018. I won't touch your garbage product, your neutered garbage product. But I digress. If you want to go deep on UVXY, you got your taste last week on the show, listeners. But I was talking earlier, listeners, about how we spent that 1 month period roughly post Tariff Tantrum pretty elevated. And then we got back down to about a 17 handle where we started the year right about mid-May. That still leads to a fair number of days above the 20 handle, which Jim likes to calculate here as well. We had a decent year north of 50 days above the 20 handle, which if you just look back at last year, you might have guessed it was fewer. But then again, as I pointed out, the lion's share of those was in that April to May timeframe. Outside of that, it was kind of slim pickings for vol upside. So Jim, what are your thoughts on last year, days north of 20, and how it compares historically, sir?
Well, it's actually still relatively calm compared to the big ugly years. 2022, interestingly.
Yeah, 2022 smokes it. That's kind of fun. 2022
smokes it. And, what happened in 2022 was, as people may recall, we had a stair-step decline in both the equity and bond markets. It was difficult to trade for some people because you didn't have the huge spikes as much as you just had a stair-step lower in equities and bonds. But what did happen was it just raised the average level of volatility up above 20. It just was, it was basically above 20 virtually the entire year. And, this year, or 2025, was markedly different from that, given that, we had really 4 spikes. And other than that, the reversions were pretty fast. It was one of those timeframes where if you're one of the people who says, I sell VIX on spikes, 2025 was, a year where that behavior was reinforced. It doesn't always work out, so buyer beware, or seller beware in this case. But 2025 was a year where that did work pretty well.
Yes, I recall vividly the day we finally broke back below 20 in VIX back in 2022, Mr. Jim. It was a big deal because you're right, we had been elevated for so long. It was one of the more protracted periods above 20 that I can recall since we've been doing this show. And we've been doing this show for a while. Again, yet another reason you should be checking out Jim's presentation when he finally releases it to the masses, listeners. Gives you some nice historical context. 2022 actually exceeding 2020, which is kind of wild in terms of days north of 20. And obviously last year doesn't even come within spitting distance of either of those 2 years when it comes to the number of days north of 20. And then again, once you take out that April to mid-May timeframe, you're pretty much looking at very slim pickings for the amount of upside you could have captured last year. But you also track the number of big move days in the S&P. Obviously very important when we're looking at vol, listeners, to look at the S&P at the end of the day. It is the mothership from whence all vol flows, at least for what we're talking about here on the show, for the lion's share of the products. You do an interesting metric, Jim. You do 2% moves in the S&P. How does 2025 stack up to historical years, sir?
Well, so the thing that caught my eye was that we've stair-stepped higher from 2023 to 2024 to 2025. 2023 was a very quiet year in terms of S&P realized volatility. We had a little pickup in 2024, a pickup in 2025. Still at relatively modest levels. Most of the daily moves were inside of plus minus 2%. But who knows, if this trend continues, 2026 could see a little spice.
That would certainly be interesting. Yeah, because you look back on last year, obviously that April period really stands out. It seemed like we were whipsawing 100+ handles in multiple directions intraday during that period. That was the period where you bought straddles. Didn't matter what straddle you bought, you did all right at the end of the day out there. But that was, again, a very short time frame, short number of data sets out there. As impressive as they seemed, as much of an impression as they made on the psyche of many traders last year, it really wasn't that many. And certainly compared to 2022, where we were, looks like around 45, 46, somewhere in that ballpark. And then, of course, going back to 2008, when things were wild, listeners, we were north of 70 by comparison last year. It looks like it came in around 12 to 14, somewhere in that ballpark out there. Also, we like to look at the old realized vol, Mr. Jim, and the old vol premium implied versus realized. We had a little bit of juice last year in terms of realized vol. Again, it was kind of localized to a few moments in the market, but at the end of the day, it translated to a decent shot in the arm for realized vol. What did you spot out there last year, sir?
Yeah, what we saw was an uptick in the average and a much wider range than we've seen since 2020. So again, I think the wide range was driven really by what happened in April. I think absent the tariff tantrum, the range would have been much narrower. But we did get a little uptick in the average level of realized vol over the last 2 years. And, we'll see what happens going forward. That range outside of 2020 and then going back to 2011, and obviously 2008, 2009, the range of realized vol that we had last year was very wide. So it would be unusual to see a repeat of that. But 2026, the bingo card has a lot of potential market moving events on it.
Yeah, looking here at this chart, listeners, we topped out at the high-low range for 21-day realized vol in the asset at close to a 50, which is a pretty impressive number. That's over 2x what we saw in 2024. Now, for some historical context, it's roughly half of the range that we saw back in 2020, where we topped out at near 100. And of course, if you go back to the wild days of 2008, we topped out near a 90, about an 85 or so on this chart. So again, kind of interesting, a pretty surprisingly wild year for realized vol, but maybe not as crazy as some of those other years we've talked about. And I mentioned the realized vol premium. You also look at VIX versus volley, Mr. Jim, which is another way to look at a premium in VIX, which is, of course, this time incorporating the skew versus the, what I like to refer to as the just the facts, ma'am, vol, which is volley, which is just straight at the money. We saw that spread widening out, not even last year, the year before, 2024, and remaining stubbornly high last year. What are your thoughts on that spread? And bear in mind, Jim, the creator of volley, Mr. Scott Nations, is going to be leaping into the fray at Vol Deathmatch 2.0 coming up in January. So also, if you have any words of advice or encouragement for him as the victor of Vol Deathmatch 1.0, have at it, sir.
Well, I'm a big fan of Scott and his team and the work they do.
It's not what you said before the show, sir, but I digress. I won't reveal that to the masses.
Now, Mark, I thought we had an agreement.
No one heard it, just our live chatters and all the producers and everyone else.
So what Scott has pointed out and what I've picked up on and pointed out to people who follow me is that volley by itself is interesting as a measure of at-the-money 30-day implied volatility. If you look at the difference between VIX, which obviously incorporates out-of-the-money options in its calculation, and compare VIX to volley, the difference is going to be all of those out-of-the-money options, and which means that people are either paying a premium or a discount, and it's generally a premium for the out-of-the-money part of VIX. And what happened back when we had that little tantrum in July and the first couple of days of August in 2024 was we saw that spread widen above its historical average, and it has essentially stayed there ever since. So, there is a chunk of volatility premium in the VIX that is only explained by out-of-the-money options, and that has continued to be the case. And what that says to me is that there are some number of people out there who are paying money to have out of the money protection on their portfolios. There are people out there who think that volatility is going to expand and pay them off for their out of the money bets. And that has remained in place, really since July of 2024. And, with the exception of, looks like maybe a couple of weeks in early March of 2025, where we got down to the long-term average, we've been above average the whole time.
Well, your presentation is certainly above average, Mr. Jim. And again, I encourage everyone. Do you have any plans when you're going to release this, sir, to the masses?
Well, it's in process. Obviously, the data, the final data is fresh. So I'm making some decisions about what data is telling a story and what data is not telling a story. So I'm lining it all up, and we'll probably be hitting the final print button in the next week.
I like it. And before we roll out of the rest of your presentation, any other highlights you want to share with the folks that leapt off the screen for you, sir, as you were looking at your data points for your presentation this year?
Well, the other thing that I've been paying attention to, and I'll probably have a slide or two in the final deck here, is for me, one of the canaries in the coal mine of 2025 has been behavior in credit markets. If we look back at the peak of the disturbance in April, what you can see is that the MOVE index, aka the VIX of the bond market, got up over 130 on April 7th. And that's essentially when Scott Bessent went into Trump's office and said, we got to dial this down now. And the MOVE index dialed down immediately and precipitously. And as you've pointed out, things calmed down pretty quickly in the equity markets and in the equity volatility markets. So paying attention to what's happening in credit markets these days can be very valuable. The other thing that I watch is just a comparison of investment grade corporate bonds to treasuries. And, that tends to provide a risk on, risk off perspective that I think a lot of people don't necessarily pay attention to. The high yield credit market, has been behaving well. Will it continue to behave well? These are a couple of things that I'm paying a lot of attention to as we enter the new year. We're going to have a new Fed chairman. We're going to see what the Fed chooses to do with interest rates and what impact that has on the bond market. But I think 2026 is a year where the bond market might actually be the drummer for what happens in equity markets.
Certainly something to keep an eye on, listeners. As we keep looking back on 2025, Jim, I kind of put together some things that leapt out to me as we're looking back on the year that was 2025. Let's start with a kind of a VIX, trades and trends for the year out there that really stood out to me. Obviously, we profile them week in, week out on the show. The first one that leapt off the chart for me, Jim, probably won't come to any surprise to listeners who've been listening to the show throughout most of last year, was that a lot of money went to die on the VIX 15 put strike last year, Jim. I don't care. Pick the month, April, May, June, August. People were buying these 15 puts every month like clockwork. And unless you got quick on the trigger finger a couple of times midweek where you had some little dips out there, they really never paid off, certainly not from a settlement perspective. So that's the first thing that leaps off the board to me from last year. Mr. Jim, what are your thoughts?
Well, again, when you have an average reading on the VIX of just under 20 for the year, those 15 puts are going to struggle to pay off. To your point, you had to be quick. You had to be acquiring those on one or more of these spikes and then monetizing them pretty quickly. And, as any number of your guests and you have commented over the years, monetization is, the only thing that matters if you're trading volatility. You've got to have a plan to monetize, and obviously picking the right strike. But you can pick the wrong strike and still make some money if you manage your trade well. But the 15 put line was a place where money went to die this year.
I don't know why that became such a popular trade this year. If a newsletter called it out, this is the first year I can recall so much action on the 15 plus. There's just some secret sauce, Jim. There's some just right amount of out of the money percentage, right amount of the premium was cheap enough to keep luring people back. This is the month I'm going to hit it, Jim. This is the month my scratcher is going to pay off. And for whatever reason, they kept doing it. Even though if you listened to the show, we said, stop buying these things. They don't work. But it was just cheap enough. So, one more. July didn't work, but August definitely is going to be the month, I should say, when my chickens come home to roost. You mentioned the difficulties of monetization last year. That's another thing that I noticed. That's a long-standing VIX trend. You could take many years and say, it was kind of hard to monetize your upside, but this past year it really stands out. We just talked about a lot of the data points, how many days, or I should say how few days there were north of 20, especially when you take out that one massive spike in April. It was really slim pickings. If you were trying to trade around or spec on some VIX upside from May all the way through to the end of the year, you only had a couple of opportunities. And even then, those were very short-lived. You often had hours, if not minutes, to really capture most, if not all, of that upside move. So we say it a lot on this show, but last year really stands out as being one of the more challenging years, Jim, to monetize the upside in particular. What are your thoughts?
No, I would agree with that. And it's a challenge in any year because, one of the things that I observe with respect to, let's call them volatility episodes, upticks involve all surges, vol explosions, vol spikes, however you want to frame it. Nobody knows how long it's going to last, how far it's going to go. And therefore, even if you get on the trade at a reasonable entry point, there's no framework to say, okay, here's where I exit. Now, so some people will say, if I make X, I'm going to get out, right? And then they look at it in hindsight and say, wow, I could have had 2X. What an idiot. Some people will monetize along the way, right? Put a trade on and then leg out of it over time. There are so many different ways to do it that I think people kind of throw up their hands and say, this doesn't make any sense. And it's very challenging. You talk to any trader of volatility and they're going to tell you that the biggest challenge is monetizing a winning trade.
Speaking of strikes and things that don't make sense, Jim, another thing that leapt out to me this year was the rise in 2025 of the 47 half strike to the upside. I already talked about my thoughts on the 15 puts to the downside. For whatever reason, Jim, some fund or group of funds decided that was their upside strike of choice this year. It was open for size pretty much every month. And interestingly enough, if you go look at the strike chain right now, listeners, and the VIX charts, you'll see a lot of 47 halves open all the way out through February and April of next year. And that's another thing. They roll them very aggressively and very early as well, which is kind of interesting. They'll start taking off February now and rolling it. I haven't really come to grips with why they fixated on that strike in particular. There was decent OI on the 45s. You could have gone to the 50s. For whatever reason, 47.5 became their huckleberry, and they put a lot of size behind it. I'll have to go back and crunch all the data for last year. I don't recall them really monetizing it really at all. I'll have to go obviously dig through the April-May timeframe. That would obviously be the most beneficial time for them. But if for whatever reason, Jim, someone or some group of someones this year decided 47.5 was their strike to the upside for whatever they're doing, probably some sort of hedge against another portfolio somewhere, but it just leapt off the page to me as odd from a strike perspective and from a size and from the roll frequency. All of it was odd, Jim.
And it's, again, if you just look at 2025, where the closing high was, call it 50, just for round numbers, you were in the money once at 47.5. Now that doesn't mean you can't make money without going through the strike. If you buy right, you can make some money along the way, but that is clearly an aggressive strike, unless you are a believer in some form of Armageddon, Volmageddon, Tariff Tantrum 2. And so, yes, one should assume that it's not, an independent standalone trade, that it's part of somebody's book where they're protecting some other large piece of risk on, and therefore, they don't have to make money every time they put the trade on. But that's seems to me to be, a very aggressive posture to be doing in size and rolling and rolling and rolling. I can't tell you that I have any insight to it.
All right. Well, speaking of data, you had a lot of proprietary data, including your proprietary VIX mix in your presentation, Mr. Jim. We also have our own proprietary indicator on the show, Jim. It's called the VIX Top 10. Very difficult, trademark, patent pending on this one out here. But we track that every week here on the show. It's become a fun little game I know a lot of you like to play along with out there. And that's something else we noticed last year. We were almost glued for the entirety of the year last year at the 8-to-2 ratio, 8 calls, 2 puts. You could count probably on 2 hands the number of times we diverged from that all year. It was the de facto norm, the de facto structure for VIX last year, in spite of some mad periods and everything else. And when we saw a few times when we got to about 50-50, you knew things were kind of wild in those moments. But outside of that, and even though the fact that VIX kind of languished for most of the second half of last year, we really didn't see many puts make it into the top 10 last year, outside of everyone's favorite, of course, the beloved 15 puts that they continued to tilt at all year long. Just there's no joy. So yeah, last year, Jim, once again, puts really couldn't make a dent in the top 10 with the exception of a few rare moments, sir, in VIXland.
Well, I think when you have a couple of events like July, August of 24, and then April of 25, you're going to have people leaning to the call side of the VIX complex because they are concerned that they will need protection more than trying to capitalize on the downside. So, we'll see if things calm down. We'll see if that gets back closer to something like 50-50. But, for now, I think there are a whole host of reasons for people to continue to be nervous about potential volatility explosions. And therefore, the lean to the call side has some logic behind it.
Well, Jim, we're having so much fun talking 2025. We're already pretty much coming up against it, but I have a few more I want to share. Can you go for a couple more minutes, sir? You got it in you?
Please.
The folks are loving it, I think. So I want a few more. I want to just shows how much went on last year, Mr. Jim. Wait till Dr. Vix comes in. He's going to have a whole bunch more. So we're not done yet, listeners. But another couple of things I noticed. You like watching the VIX term structure, Jim. Last year was not the shining bright spot for VIX futures in terms of overall volume. They struggled for most of the year, even in a year when just about everything else in the derivatives world was exploding in terms of volume. We were talking about threatening 15 billion contracts last year. VIX futures, outside of a few exceptions towards the latter portion of the year, were down almost every month last year, which was kind of wild. And again, something that might surprise a lot of people, especially given, how much action was going on in the vol space last year, that VIX futures really couldn't catch a bid volume-wise. Did you notice that, Jim, as well?
Well, and my question for you, as the keeper of all good data on this, did we see an offsetting increase in options activity?
Yes, options was up every month last year. It was exploding. It was ridiculous. 1 billion is the norm. If you hit $1 billion now, it's too low, sir.
Yeah, so I think what's probably happening is just a shift. And, again, you talked about, rolling 47.5 calls and ratio spreads. It wouldn't surprise me to discover that folks who want to construct trades in the volatility complex have shifted some of their activity from the futures to the options. The futures are going to have a certain amount of activity that comes from the volatility exchange traded products, the SVIX, UVIX, UVIXY. But it wouldn't surprise me to find out that the institutional crowd, the hedge fund crowd, has moved more of their activity from the futures to the options.
One other trend we noticed, and I have to give the feather to Dr. Vix for this is something I had been kind of thinking about for a while, but he encapsulated it. He embodied it with his discovery of the VIX 200 puts going up. It was back in July. It was earlier in this year than I thought. And the 200 put spread that he was talking about. And that kind of became the embodiment of what we were talking about, certainly for the latter portion of this year in Volland, which was just terrible capital efficiency when trading VIX this year, Jim. I mean, there are many ways you can think about getting short VIX. Loading up on the 200 puts, not really one of them, nor is it one that I would suggest for many folks out there. They did it with the put spread, and there were other trades that kind of piggybacked and went around it. But any sort of trade that puts that much capital, ties up that much capital to do it, A, and B, exposes that much capital to risk for a comparatively modest gain. I don't know. I have to shake my head at the capital efficiency this year. Did you notice that, Jim? It kind of stood out to us here on the show.
I don't even. I have to do a little manipulating just to get to the 200 puts on the screen.
Surprisingly, there's some size OI now. I think it's because of us on the show. We've spoken it into fruition.
I can't fathom constructing a trade that included VIX 200 puts, but again, I'm in the words of Forrest Gump, I'm not a smart man.
A couple other things I wanted to notice here, just general highlights outside of VIX itself on the year. Obviously, in general, a lot of you like to play the vol erosion game. I know there are many different ways to play that game. In general, it was a decent year for that game. But you kind of had to be patient if you were playing that game. I know some of you like to play it through VXX, and VXX got quite juicy around the April timeframe, as you might expect. It closed at the 85 level or so, right around there on April 8th. So an extremely lofty level for all things VXX. Now, a lot of you might have come in and said, okay, here we go. I want to play that erosion. By mid-June, so we're talking April 8th is when it hit that apex. By mid-June, it was still 55. So you could say on one hand, 30 points, that's great. On the other hand, it was still extremely elevated compared to where VXX was hanging out prior to April, and certainly does historically. In fact, I know a lot of you wrote in, well, I shouldn't say a lot of you, a few of you, and really it stood out to me because you were so, shall we say, optimistic on your strike selection, talking about 20 handle puts in VXX around the summertime. And I thought that seems extreme. And that was a challenge because VXX didn't break 40 in the other direction again until late August. So if you were playing that fade game from April until August. It took a long time to break through into those handles that I know a lot of you were lining up on this year. And if you're talking about the 20 strike, the few of you who wrote in about that one, yeah, we didn't get there until pretty much a week and change ago, 2 weeks ago out there. So it worked out. If you were trading the erosion game in VXX, you just had to be a little bit patient. Jim, I know you like a little bit of VXX dabbling. Is that your takeaway as well this year? It was a good year for it. You had to kind of just be a little bit judicious with your entry and exits, and maybe also not be as optimistic on your strike selection, sir.
Well, and you had the, my go-to expert on the show last week, Michael Listman, has forgotten more about constructing option trades with these instruments, particularly, playing the downside of the spike. But, again, volatility is volatile. And so, getting the timing right, getting a structure in place that, you can manage and that you won't, panic out of, can be very challenging. Because, when we get a spike the way we did in March and April, it can be very challenging to identify. In fact, it's, essentially impossible to identify the peak, where you would want to put your trade on to roll down the other side of the mountain. I tend to look at it the other way, which is to say, rather than try to play the roll down in VIX or UVIXY or VXX or UVIXY, I tend to play the other side and look for the opportunities to get long a structure like SVIX, which is essentially the same trade, just using the different underlying and using the futures rather than options. But it was a wild year from that perspective. That peak that we reached in April, was a pretty high mountain that created some opportunities. But, unless you've been through it multiple times, unless you've been through putting a trade on and then repairing the trade, taking it off and putting it on a new one, again, monetization is critical. It's not a game to play without some deep knowledge of how these structures work and what the extremes can be.
Another way a lot of you like to play the vol fade game is through inverse products like SVIX. So we talked a lot of SVIX on the show last year, some of the highs and lows, the challenges, options wise. It's still a challenge. Liquidity is not great in SVIX. They added weeklies and still didn't really gin up a lot of paper out there. But if you were an active trader of SVIX last year, you did pretty well. If for some reason you're buying and holding SVIX last year, you had a rough year, especially if you came into the year owning it. You're kind of pretty much flat on the year now if you did that, because you came in right around a 25. And then, of course, as we were talking about on our oddities show back in that April timeframe, when, of course, vol spiked and SVIX got clobbered down to about a 10 handle and even kissed some 9 handles intraday out there. That was obviously your opportunity to start loading up. We did talk quite a bit on our options oddities show. You could sell 10 puts back then, all sorts of strikes that seem outlandish now. You could just obviously just straight buy it as well. Both those trades worked out pretty well, because if you did that back in that April timeframe, you had a good year. You ran up, had a pretty good run in SVIX. And also, it wasn't a straight shot up, so you had opportunities to overwrite, sometimes fairly aggressively on your SVIX, and that, of course, added to your returns on the year. If you did miss it in April, you had an opportunity back in November. It did sell off again back into the mid to high teens, so if you wanted to scoop SVIX, that was another opportunity in the year. And if you did that, you still had a pretty decent year, because for all of our saying this year, and I know Russell was really hitting on this on the show a lot this year, he didn't think December was really going to be your normal December. There was a lot of question marks around the Fed and everything else. And usually December is where vol goes to die. We didn't see that until pretty much the second half of December. And then all of a sudden, vol caught up for a lot of lost time and did a lot of living in the last 2 weeks of December, where SVIX really stole a march, vol eroded pretty aggressively. So if you traded SVIX judiciously this year, and again, we were all over talking about back in the April timeframe, this was a good time to put some in your back pocket for a rainy day, then you had a good year. I have admitted on shows like Oddities and others, I have kind of bailed on all my SVIX now. I am waiting for that reset moment. I am not a buy and hold SVIX guy, nor should any of you be out there. But still an interesting year. Jim, did you do any SVIX sling? I know this is one that's kind of spooked you a little bit in the past, but we saw it did hold up in April. It didn't go to zero, went to about 9 and change. So that's better than zero, Jim. Any SVIX slinging or thoughts this year?
No, it is a staple of what I do. Again, I'm boring. I'm happy to take positions on either side of the trade using SVIX and VXX or VIXI or UVIX on the long side. And what's been particularly interesting this year, given the vol of vol and the volatility, if you just go back to, that little November baby spike, and you look at what's happened to the S&P from that low on the 17th of November, it's up, call it 3.5% over that time frame. Over the exact same time frame, SVIX is up 40%. So, that's a pretty dramatic outperformance, taking the trade short volatility rather than long equities. And, that's the attraction of a product like SVIX. It's the attraction of a product like VXX, VIXI, or UVIX. If you can get in front of one of these spikes, not necessarily easy to do, but the payoffs can be pretty enormous.
All right, we are coming up again. So we talked a lot of UVIX and UVXY on the show last week. Not too many highlights from those outside of what we just talked about, listeners. So instead, let's get into our first crystal ball of 2026.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. We're coming to it a little bit later in the show than we normally do, so we don't technically have our end of show closing vol level, but I did manage to grab it while we were talking earlier. We were right around a 1488, 1490 in VIX cash. The exact level doesn't matter as much because I was at a 1445. I was the closest, but I was still about 0.4 of a point away, so no joy for me. Russell was at a 1333 this week, so no joy for him. And Mr. UVXY trader Michael Listman was at a 1417, so unfortunately, no joy for him for our final crystal ball of 2025. But now, Jim, we come to it, the great question of our day. And I mentioned at the top of the show, we're going to come back to where VIX closed at the end of the year, because it's a surprisingly heated issue, Mr. Jim. I know Russell has talked about it in the past when he's mentioned different vol levels, and people have come at him and called him a pedophile and all sorts of strange things about things that are seemingly very straightforward. So I've been looking at a variety of different platforms to try to get the lay of the land of what people are thinking when it comes to the close for VIX cash last year. Mr. Jim, when I ask you that question, what would you say is your closing level for VIX cash? What are we going to use to pay off our 2025 VIX contest, sir?
It would seem that shouldn't be a very complicated calculation.
You would think. And yet, when I tend to go by the mothership, which is, the SIBO products. They should know their own product. They have it at about $14.95. But even just a cursory look at some of the low-hanging fruit platforms like Google Finance is showing a $15.01. So it's still a weirdly obtuse metric, Mr. Jim.
Interesting.
So I'll let you be the ultimate arbiter. What do you think VIX cash went out at?
Well, let me just check one thing.
And if you lose, listeners, you can blame Jim, not me.
Okay. Because I see a $14.95 one place.
Yes.
And let's see. And I see a $14.95 someplace else. So I don't know.
I think we have our winner at $14.95. If you want to write in for something else, give your reasoning why. Listeners, I'm sure there will be. I saw 1608. Someone's going to write in because that was their prediction. So listeners, now that we have our final print for VIX Cash of 2025, we will go back. We will go through. We had a lot of submissions for last year. We will go back and find if there were indeed any winners in our crystal ball contest for 2020. Last year, we had Steve Sosnick win, and we had a few listeners win. Again, it's a challenging metric. It's a 1/10 of a point, Jim, for the entire year. That is no mean feat. So we'll see if anyone managed to come within the yardsticks last year, in which case we will reveal it on the show next week, and you will win some fabulous prizes because you're obviously good vol pickers. Also, you get to join Steve and the others in our Crystal Ball Hall of Fame, Jim, which is also pretty cool, if I do say so myself. So, Mr. Jim, you have 2 questions ahead of you right now. First off, give us your vol pick for next week. If you want, I'll already go first. I already wrote mine in. I'm feeling a little bit more juice next week at 1635, but that leaves you a lot of room to go for next week. And then B, you have a choice. Do you want to give us your vol closing print for next year now, or do you want to wait till our official poll goes live next week and then you can kind of vote in on that? You want to have some time to ruminate?
I'll give you both of them today. Why
okay.
not?
All right.
So for next week, in honor of the meatball who couldn't be here today,
You're going to do palindromic nonsense?
palindromic nonsense, 1551.
Oh, okay. Someone's got to play that card. Might as well be you, Jim.
I like Mark.
So you're feeling a little bit more vol too. It's not quite as much as me.
Right.
And then you get the big drum roll. Close of next year. What do we got, sir?
I think for the close of next year, I'm going to go 2350.
2350. Interesting level. It's such a challenge because, this year you were looking good if you were a little bit higher vol until that last couple of weeks of December kicked in and just cut the legs off from everybody. So kind of interesting stuff. What are your end of year vol predictions? Start getting them in. We will have our official VIX prediction game kick off next week. We will also pay off the winners from last year's contest on the show next week. I'm sure Dr. Vix will also have his own vol musings from 2025 that he'll like to share with us. How's that, Mr. Jim? You kicked off the new year. We kind of took you into deep waters. We made you do your presentation early. You had to go a full show with just me, no other support from Dr. Vix, but you performed admirably, sir. Well done.
Well, thank you. I'm breathing a heavy sigh of relief. I was a little nervous having such big shoes to fill.
Now you can go have a heaping helping of that spicy Vicks mix or whatever you want to make it for this year, and then have a nice Vixology drink to go with it, sir. You are done. And before we go, sir, if folks want to check out your vol musings online or maybe share their own Vicks mix recipes, where should they go? What should they do?
Well, on X, formerly known as Twitter, it's at Vixologist. And there's a Substack called Vixology. And both of those are places to follow me for VIX musings, as it were. And Ballast Rock Private Wealth is my professional home. You can find that on the interwebs as well.
There you go. Check them out, Ballast Rock. Share your own recipes for VIX Mix. Maybe you have a tasty idea that we haven't. Maybe a few wasabi beans for the heat in there, Jim. I don't know. We're starting to get kind of crazy out here. And of course, Dr. Vic's not here, but check him out online as well. 2 S's, 2 L's, RHOADS. If you get to the drunk weatherman in Tampa, you've gone too far. Dial it back one, and you'll get to Dr. Vic's musings. And of course, while you're checking things out online, make sure you check out our friends over there at Tasty Trade, tastytrade.com/podcast, the place to go to kick the tires and light the fires. We're kicking off a new year. We just put out a big thing thanking everybody who were parts of the network last year, helped bring all of this great content to you. No small part of that is the sponsors on the network, listeners. They're the reasons you folks get legions of free content coming at you week after week, month after month, indeed nigh on 19 years now in January, which is wild. So go ahead, go out there, check out the sponsors, tell them you heard about them on our shows. It goes a long way towards keeping all that content you like coming at you. And if you want even more content coming at you, you want to join us for the official after party of Volatility Views, known as Options Oddities. You also want to get your name in the hat like our pro member whose name I am blanking. Eric Sanders. There we go. Eric Sanders, who won the Pro Trading Crate for December. You want to win too. And also you want to check out the upcoming Vol Deathmatch 2.0, which should be a banger coming up in January. Get on over to the pro, theoptionsinsider.com/pro. We'll be back at our normal time, listeners. Obviously going long a little bit on Vol Views today. So we'll be back at our usual time for Options Oddities to kick off the new year. And then back again with all of our usual content next week until we're back again next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. Unlike some guys, Tasty Trade puts traders first. Maybe you're the type to hunker down on your desktop for hours. Maybe you breeze by on your browser. Or maybe you just need that top-rated app right by your side. However you do it, Tasty Trade's got the advanced tools you need to tackle stocks, options, futures, and more, all in one place. Chart your heart out with over 300 indicators. See opportunity differently with interactive curve analysis. Use backtesting to learn from the past and plan for the future. The platform is only the beginning of better trading. You'll also find low pricing, lots of education, and backup from a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.